السلام عليكم ورحمة الله، مساكم الله بالخير. حضورنا الكريم، يشرفنا اليوم الجمعية الاقتصادية الكويتية استقبال البروفسور مستر ستيفان هيرتوغ، أستاذ مشارك في قسم الحكومة في كلية لندن للاقتصاد والأعمال. Professor Stephen Heritage has an vast experience in Middle East since 2000, and today he can be talk about the oil low price and the effect for the all GCC countries. So welcome, Professor.
Thank you very much, Mohamed. It's a great pleasure to be back in Kuwait. I've given a couple of lectures over the years, and I've found that in comparison with the whole region, it's always been the most lively debate culture that I've encountered here. So I expect to be challenged tonight. I hope you'll be. I always very much enjoy here because of the lively debate culture here. I hope I'll be challenged. I hope you'll be critical, but I hope you'll also be nice to me. I almost was too late for the lecture because I decided to walk from the 4 points by Sheraton. And one of the things that I was going to say, that I was going to address briefly in the talk tonight, is the low levels of capital expenditure by government in Kuwait. But I actually ended up on the wrong side of a gigantic construction site. I had to walk some 3 kilometers extra, so I'm revising my views about lack of project expenditure. Clearly there's a lot going on. Although there might be a point to be made about health and safety, because I had to climb over a whole pile of construction material to get here, but I made it safely. What I'd like to talk about today is a bit of a mixture of politics and economics. That's really what I do, political economy. And I'd like to talk about the implications of the low oil prices for the distributional systems in the GCC countries. So for the welfare regimes, for the wealth sharing regimes that the countries have built up over decades as tools to share their natural resource wealth with their populations. And so there'll be a bit of economics, but there'll be also quite a bit of political economy as to what it means for subsidy systems, for public employment, which are the largest items of public expenditure, and how potentially in the long run those could be reformed in a way that is politically as well as economically feasible. So again, we'll give a very quick overview of the current fiscal situation in the Gulf. I'll keep that relatively short because I think many of you will be following these debates quite closely. I'll quickly discuss policy reactions to the deficits that are accruing pretty much in all Gulf countries by now, even in Kuwait, which by most counts has the lowest break-even oil price, so we can manage not to incur deficits with relatively low oil prices. Then I'll discuss government employment as the largest item of expenditure all across the region, and by far the largest in Kuwait. Discuss the political economy thereof, and I know that's been widely discussed in Kuwait already. So the value added that I hope I'll bring is by discussing some of the ways that government employment could potentially be reformed in a way that doesn't raise enormous political resistance within society. And then if there's time left, if not, then we'll keep it for the Q&A. I'd like to say a few things about the opportunities, the potential for the private sector to pick up the diversification challenge, to pick up the growth challenge where government spending at the current time is plateauing or is declining. And I'll give a fairly pessimistic low to mid-term perspective on that, which is partially just my temperament, but I think it's partially also driven by data. So none of the GCC countries, including the very richest ones, currently is on a fiscally sustainable trajectory. So in a status quo scenario, all countries will run out of overseas assets sooner or later. It's just that in some cases it's much sooner. In Bahrain, pretty much all means of raising debt and running down foreign assets have been almost exhausted. And the three high-rent countries which have large oil income per capita, Kuwait, Qatar, and the UAE, have the longest time horizon. And you see on the left side, I'm not sure whether that's very well visible at the back, you see that depending on different oil price assumptions, Kuwait, for example, would have between 20 and 30 years left of savings, and after that period, there would be would have to be some kind of drastic fiscal adjustment under the current scenario. So all the KIA assets, including the Future Generations Fund, would be used up by then within about a generation, unless there's fiscal adjustment happening now. The cases that are more interesting in the short run, because they are really approaching a fiscal crisis already, are Bahrain, Oman, and Saudi Arabia. So people in Kuwait, Qatar, and the UAE will be watching closely what's happening in these places and what's politically as well as administratively feasible in terms of fiscal adjustment. And we've already seen quite a bit happening in terms of energy reforms, where Oman and Bahrain, for example, have adjusted their transport fuels to international price levels, which was relatively feasible because currently international price levels are pretty low, as they're correlated with the oil price, but it's still something that wouldn't have been thinkable just a few years ago. The big question marks over Saudi Arabia, which hasn't been able to make that kind of adjustment fully yet, and whether politics of that might be a lot more complicated. So are we just reliving what happened in the 1980s and the 1990s? When oil prices dropped, there was an extended low oil price period, and governments gradually ran down their reserves, waited it out more or less for 15 years. There wasn't that much proactive adjustment across the region, and in the end, in the early 2000s, the oil prices picked up again. It's an imperfect analogy, because on the one hand, the fiscal reserves, the overseas savings, are actually larger relative to GDP and much larger in absolute terms than they were in the early 80s, but the spending needs are also drastically larger than they were back then. So there's more money around, but it's going to be drawn down at a much faster rate, simply because the populations are much larger, and the types of spending that can be cut down relatively easily, which is capital spending, project spending, spending on infrastructure, as a share of total spending is a lot lower than it was in the early 80s. So in, for example, 1981, Saudi Arabia spent almost 2/3 of its budget on large projects, and they could just stop that. That was politically doable. They drastically reduced their expenditure without hitting households very hard. Of course, the contracting sector suffered. Tens of thousands of contracting businesses went belly up, but the bulk of the population was protected. Now this time around, the commitment, the distributional commitment to public employment and mass subsidization of energy for the population is a lot more expensive. So that locks in break-even oil prices at a much higher level. And that means that the adjustment will, if anything, have to happen more quickly. And encouragingly, we've seen sign of quicker adjustment this time around than we have in the early 1980s, but the pressure is also much higher. Somewhat less so in Kuwait, but it's very high, for example, in Saudi Arabia, which could be in fiscal trouble in 3-4 years, where the Saudi Riyal peg is going to be under enormous pressure very soon. And it's really an open question whether they can adjust quickly enough. They have to certainly touch things that are politically and socially quite sensitive in their budgets. So these are just a few figures on the locked-in, as I call it, spending. So spending that's current, that's on wages, salaries, transfers, that is much harder to change than capital expenditure. And in Saudi Arabia, wages and salaries in 2016 account for 450 billion Saudi riyals. That's 53% of the total projected spending. And that's higher than almost anywhere else in the world. Very few governments spend such a large share of their total outlays on salaries and transfers. And that's quite problematic. Similar figures in Oman and Bahrain. Governments internationally tend to spend 25-30% on salaries, and the rest on operations, maintenance, capital expenditure. So there's a lot less flexibility there than in many other countries in the rest of the world, unless you start cutting salaries or firing people, which is very difficult. The discretionary spending in terms of project spending is higher in the high rent, in the very rich GCC countries, Qatar and the UAE, but not in Kuwait. In Kuwait, actually, the share of current expenditure, that's expenditure on salaries, transfers, and subsidies, is the highest in the whole region, 73%. So you have the lowest share of project expenditure, even lower than in Bahrain, Oman, and Saudi Arabia. So while your break-even price is lower by most measures than in any other GCC country, the part of spending that you can't easily touch is also the largest. So you have the least downward flexibility fiscally. But that being said, in all other countries, including Qatar, Abu Dhabi, Dubai, the share of salaries in total spending has been increasing. So it's also decreasing flexibility over time. But say Qatar tends to cut quite a lot of slack. It can get rid of a lot of project and infrastructure spending and thereby adjust fiscally before it has to hit the entitlements of individual households. Really alone among the GCCs that should be high-income countries, Kuwait's budget is dominated by current expenditure. So you see here that wages and subsidies, which is just the figure that I showed before, constitutes 73% of the total. Capital expenditure is quite a small share, and then there's some other expenditure. As you mentioned, this graph is taken from a paper by TICG and Oliver Wyman that in the process of which I've also been a little bit involved, and that's a very good reference for especially official Kuwaiti fiscal data. Now, how much of a problem is it that there might have to be austerity? I mean, perhaps we can overcome the political resistance, we can in some way start taxing people or reducing salary expenditure and adjust the whole system. Well, it'll have very significant economic knock-on effects. If you compare the GCC countries with countries in the rest of the world, so with, in this case I use Turkey and Singapore as benchmarks, the percentage share of government final consumption in the non-oil economy is much higher than in other places. So that means if you take away government spending, there's not that much economic activity left. And what's left often is indirectly dependent on government spending. So even if there's private household spending, people going out to restaurants, to shops, doing domestic tourism, most of the income of those people is derived from government, so it's government salaries. So directly or indirectly, most demand is really government generated. So if you engage in austerity, it has a stronger knock-on effect on the total economy than almost anywhere else in the world. Economies continue to rely very strongly on the hydrocarbon sector, and it's almost as much as in the 1970s. So there's been some diversification, but by and large, hydrocarbons still dominates economies, and you see the red line here, which is Kuwait, is actually the highest. So recently, in nominal terms, hydrocarbons, so oil and gas, constituted almost 60% of GDP. It's gone down now because prices have gone down, but depending, if you measure it in real terms, and depending on where you fix your base year price, it really hasn't changed dramatically since the 1970s. Similarly here in the previous graph, if you look at the share of government spending, of government final consumption in non-oil GDP, Kuwait has among the highest shares. So the total economy is particularly government dependent. And I mean, I have a bit of a question mark about the UAE line there, which looks like it's super diversified, not dependent on government spending at all. I think that's sort of an accounting trick. I think this is because all the state-owned companies and some of the emirate level spending is not accounted for. If you count in Mubadala, DP World, all the government-owned companies, and count them as public sector, then this line would be dramatically higher also. Here we go. So what have been the policy reactions to the revenue crisis, given the oil crisis? There's been a short period of kind of denial or thinking that, well, the prices will climb up to 80 or 100 dollars per barrel again for a couple of months, but that was pretty brief. I think a healthy sense of crisis, at least among policymakers, set in pretty early on, and there's been more adjustment than I would have expected. Although far from enough, at least on the energy subsidy side, all across the GCC, governments have done at least something. Kuwait started early with diesel and kerosene, and there was a little bit of backpedaling after there was like a crisis with the Iranian bakeries and some other protests. But at least everywhere something has been done about either transport fuel and or electricity prices. And even the Saudis have started touching subsidies, which proportionally as a share of their GDP are the highest across the GCC. It's not clear whether their midterm target to increase oil prices to international market levels is politically feasible, but at least they're probably about to announce that in their national transformation plan that will come out in the coming weeks. So by 2020, they want to set everything at market prices. There's been a political advantage to those things happening at the same time. I don't think there's been very close coordination, but different GCC governments could always point to their neighbors and say that, look, The Emirates have already increased their gasoline and diesel prices to international levels, and the Bahrainis have done it. So that, I think this gives more political cover than people would have expected. So that's been altogether positive, although by itself subsidy reform is not going to fix the fiscal issue. It's an important part, it's the most significant thing that can be done in the short to mid-term, but it's not going to fix the long-term expenditure crisis that will result from a status quo scenario under which most people continue to be employed in government. That can't be financed even if there's a complete energy subsidy reform. So further steps that are currently under discussion are value-added tax. There's been a lot of discussion around that. Now the target, the semi-official target is January 2019 for VAT all across the region. And some governments seem to be better prepared than others. I know that, for example, Saudi Arabia, the Department of Zakah and Income Tax, has been preparing for VAT for about 15 years. They have all the systems ready. They have everything prepared, but they haven't gotten the political go-ahead. But they can probably roll it out reasonably quickly within a year or two. Other governments, including the UAE, which have actually been pushing very hard on the VAT, actually haven't done the administrative homework yet. So it could take until after 2019. And of course, the political feasibility is another question, because that's something that directly hits the pocketbooks of citizens. I mean, my hunch right now is that it is going to happen. It will be set at 5%, and there will be a lot of basic consumer goods, a lot of staples exempted, foodstuffs and things like that, healthcare. And it will be good in terms of building taxation capacity, in terms of the political signal that the fiscal crisis is being dealt with. But the revenue potential of VAT is really quite small, actually. It's less than 2% of GDP. So again, it's a useful thing to do, but it's not a game changer. If you run deficits at 10 to 15% of GDP, it's not by itself going to make a major dent. Another thing that's been talked about a lot, particularly in Saudi Arabia, is privatizations. And whereas there's some low-hanging fruits, perhaps selling off some utility assets, selling off some things that should obviously be in private hands, some government-owned hotels, grain mills, and foodstuff distribution. I think there's limited potential for that in the bigger picture, because the really attractive blue-chip companies, say Emirates Airlines, for example, in Dubai, those are absolutely strategic to the governments. I think those governments would be very reluctant to give up the commanding heights of those entities, which have been critical in their diversification strategy. Similarly, SABIC in Saudi Arabia, some more shares might be sold off, but I don't think the Saudi government would really give up control over its prized heavy industry asset that has been so critical in driving the industrialization strategy of the kingdom, and hand it over to the private sector. Also, valuations are depressed. Stock markets are not particularly highly valued right now, so that would reduce the income potential. And it's a one-off thing. You sell it off once, and if, say, you're the Saudi government and you sell off SABIC, or you sell off 20-30% of your 70% share, you lose the dividends in the future. Right? It's a very important non-oil revenue source. So it gives you a positive bump in your income in the short run. In the long run, I think it's a net negative. Same is true, incidentally, about the IPO of Saudi Aramco that has been much discussed and that people have been much bewildered by. We can perhaps take that up in the Q&A, but if they should IPO even just 5% of Aramco, internationally or locally, and they hand over the dividend rights to shareholders, I mean, everything would depend on the taxation regime. Let's say it's untaxed and 5% of the Aramco profit is handed over to private shareholders. That's pretty much 5% of state income that's lost forever, that's lost in perpetuity. So again, probably not such a good idea. Of course, you can tax Aramco at 90%, which seems to be the kind of informal arrangement. No one knows what the exact taxation regime is. But then, you sell off something that generates very little net revenue, so you wouldn't get very much money for it. It wouldn't be as attractive. So privatizations, some potential, but again, not a game changer. The big thing that's going to happen is going to be adjustment on the capital expenditure side. So that's projects, and it's already happening in quite a brutal fashion in Saudi Arabia, where most contractors haven't been paid for more than half a year. Their workers have gone unpaid, they've gone out in the street, demonstrated, try to beat up their managers in the case of Saudi Uji and bin Laden. It's politically easier. I mean, it's not good for the merchants, for the contracting businesses that are involved, but historically it's always been preferred over cutting benefits for the bulk of the population. So the merchants have a lobby, but it's not as strong as the political interest of the citizenry. And I think it's even more so the case in Kuwait, where the middle class, the citizens are very well organized through public sector unions, through parliament. So I think it will also here probably be the business class that will bear the brunt. Although there's so little capital expenditure to start with in Kuwait, that there's not that much potential for cuts. So there will be larger cuts in the UAE, in Qatar, and in Saudi Arabia. In Saudi Arabia, they've pretty much frozen everything. They've given up the Jeddah Metro. They're just finishing up a couple of projects that are in the pipeline. The Riyadh Metro, a couple of railway and airport projects, and that's it. There won't be any large infrastructure built probably for a long time. Now, that gives a bit of leeway, but again, not that much, because, as I said, current expenditure in most cases dominates total expenditure already. At the same time, there are pressures on the expenditure side because populations continue to grow. National populations on average grow something like 2% a year across the GCC, and the working age population grows even faster, because those are the people who were born 17, 18, 20 years ago when population growth was even higher. Then you have increasing female participation on top of that, and you can easily reach significantly above 3% per year working age, working population growth. So for the time being, none of the GCC states has figured out a formula to accommodate a majority of those job seekers in the private sector. By default, they've always been soaked up either pretty quickly, like in Qatar, or in the UAE, or after a longer waiting period, like in Bahrain, Oman, or Saudi Arabia, soaked up by the public sector. And unless that fundamental pattern, that part of change, that implicit guarantee or promise of a public sector job, there is a long-term fiscal crisis built into the systems, because the people who will seek government employment are just going to grow. And there were some signs of a demographic transition, that population growth is slowing, but recently that demographic transition itself, at least in some cases, seems to be slowing again. In some cases, women seem to be having more children again. So the demography in the midterm looks quite problematic from a fiscal basis. Of course, in a tax-based state, you have a larger population. The population earns more money. It generates more economic activity, and then the tax base gets larger. In states that are not tax-based, like the GCC countries, you have a fixed revenue basis and a growing population among which to spread those resources. So it's a very different story. Usually, under the right conditions, population growth is good news for economies, but it's not, I would argue, the case in Gulf countries under the current model. So, bottom line, you really have to do something about public sector employment, because that has been crowding out all other types of spending historically and is set to grow under the current model. And you see in those bars, I just quickly summarized that in all countries, the majority of national employees are accommodated in the public sector, and the private sector is dominated by expatriates. Now there are nuances. There's more Bahrainization, Omanization in those two countries. There's pretty much no national in the private sector in Qatar. And Kuwait is actually somewhere in between, given how rich it is and given how generous the government is. The level of Kuwaitization in the private sector is not that bad. Compared to the UAE and Qatar, there's actually quite a few more Kuwaitis working in the private sector, proportionally speaking. Now it's sort of damning with faint praise, because still 4 out of 5 Kuwaitis are working in government if they're working. But the countries further down the line, thanks in parts to the Dam al-Amala system, which is in some parts abused, so there's some phantom employment, but it has also incentivized genuine private sector employment through wage subsidies. So I quickly did the maths this afternoon, that if you pick a random Kuwaiti employee, a Kuwaiti national, the odds that that person is employed in government are 20 times higher than the rest of the world. So in the rest of the world, you pick a random person, usually private sector employed. In Kuwait, you pick a random person. It's the likelihood is 20 times higher that that person is government employed. So a real dominance of government employment, and the tendency has been pretty constant. So the proportion of government and private sector employment hasn't really changed very much, despite various Kuwaitization quota and Darnala attempts. And historically, in all of the countries, pretty much every year, when you've even in times of large deficits in the 80s and 90s, governments have added to their payroll. Every year in Saudi Arabia, they've added more workers to the public sector, although by the late 90s, they reached a debt level of 100% of GDP. But it was seen as politically so essential to get especially young male job seekers off the street that Saudi Arabia was really willing to risk bankruptcy to accommodate them in the public sector. So the number of Saudi state employees has gone up every year since the 1950s, since the era of, since King Abdulaziz died, every year more public sector employees. And what's also been happening, particularly since 2011, is that the relative advantages of public sector employment have increased. So that's been the case in Kuwait, where there were a number of salary and allowance increases in the wake of the regional political unrest and some domestic political issues, but also across the rest of the region. And Saudi King Abdullah decreed 300,000 new public sector jobs in 2011 when Mubarak was falling and Ben Ali had fallen. And that again sent a very problematic signal to first-time job seekers. Even those who were thinking, well, perhaps I should get skills and education that will get me a good private sector job, they got a clear message, okay, I just have to put myself into the waiting loop, I sign up at the Ministry of Civil Service, and sooner or later I'll get a government job. And I've done some survey work in Saudi Arabia where it's very clear that the preference of the average job seeker is government sector employment, very strongly so. It's not the case with the elites. None of the GCC countries do the top potentials usually want to join government. They go to the private sector, but the typical kind of graduate of a local university or vocational training program, they really seek government employment. So the wage gap between government and private sector has increased since 2011, and there are, of course, also all kinds of non-wage advantages to public sector employment. Longer holidays, better job security, better pensions, a more congenial work environment in some cases. So you need to be quite committed, you need to be quite ambitious to join the private sector. Now, one thing that has arguably resulted from that signal sent by government, we will provide jobs in government for you, is that people, first-time job seekers or people entering the university system have decided to go for the credentials that will give them a government job rather than credentials that will make them productive in the private sector. And I think that's reflected in education statistics. Well, here in the Saudi example, for example, you see that there's a disproportionate share of people with humanities degrees, a lot of them Islamic studies, which if you look at survey data from private sector employees makes them pretty much unemployable in the private sector. There are very few people with these kinds of degrees who are in the private sector. Whereas for public sector employment, what you usually need is a credential, and it doesn't matter that much which discipline it is and what exactly you've studied. You just need to jump through the hoop, get your ijaza, or you get your degree, your diploma, and then you're entitled to be at least on the waiting list for public sector jobs. So I think it's been very distortive of the skill acquisition among nationals. They didn't have a good reason to seek the right education, unless they were quite talented and ambitious, which is of course the case with a minority, but not with, I think, the bulk of the population. And there's also quite problematic survey data showing that the vast majority of jobs that are available in the private sector are actually rejected by people. And this is Saudi survey data. This is a survey that I conducted myself together with YouGov and Accenture. And apart from management and administrative jobs, the majority, really all other jobs are rejected by a majority of nationals. And those are Saudi first-time job seekers. And this is a country that's, of course, a lot less wealthy than Kuwait, and where the waiting time to get a public sector job is a lot longer, and public sector jobs are less attractive. So I haven't run such a survey in Kuwait, but probably the result would be the same or even more dramatic. So everything that is in growth-oriented, manufacturing, diversification-oriented sectors really is rejected by the majority of people. Of course, construction technician, that's not a big surprise, but you know, that so many people don't want to do sales, for example. That came as a bit of a surprise to me. Instead, what people do is to queue for government jobs. And here is a graph from comparative survey data generated by Pew, showing how much people prefer public sector jobs over private sector jobs. So on the vertical axis, you have really the proportion of people who want to go to the private sector. And you see that in Kuwait it's about 0.1 or 0.11, so it's about a tenth of the population prefer the private sector over the government sector. And the rest of the Gulf countries are all pretty much at the left end of the spectrum. So Bahrain, UAE, Qatar, Oman, Kuwait, everywhere only between 10 to 20% seek a private sector job. The rest prefers government. In Saudi, you supposedly have 1/3 of the people wanting a private sector job, but then you get to that and you see that, you know, yes, perhaps, but you know, only under very restrictive conditions. So there's a very clear preference for government employment. It is understandable because just in terms of the sheer material factors, government employment is more attractive. You know, I might do exactly the same if I was born and bred in one of the GCC countries, and the prevailing wage levels in the private sector are quite low. I mean, Kuwait has, I think, gone the furthest in fixing that with the Dam al-Amara system, but you know, with all its problems, I think it has had a good impact on Kuwaitization. But if you look at Saudi data here, for example, often Saudi policymakers say that, oh, we have 8 million expatriates, we only have to replace 1 or 2 million of them with Saudis and our employment problem is solved. But if you look at the jobs those people do and the salaries they get, you know, in 2011 there were less than 400,000 foreigners who actually made more than 3,000 Saudi riyals a month. So this means out of 8 million jobs, more than 7.5 pay so badly that no Saudi would ever consider taking them. So something has to change about salary structures and work conditions in the private sector for it to be able to absorb more nationals. And I'd assume that the picture looks quite similar in Kuwait. I got some salary data from the private sector, but it's not broken down by nationality. So how many nationals could the Kuwaiti businesses employ? So let's do a quick back of the envelope calculation. So you have around about 2 million individuals in the private sector in Kuwait, but most of these jobs are not really candidates for Kuwaitization. Only 16% of all jobs held by expatriates a couple of years ago, and I don't think the proportion has changed, pay more than 300 KD a month. And that, we would say, is kind of the absolute minimum that Kuwaitis would consider with Dam al-Amara and everything. So that's 250,000 jobs, and most of those are technical jobs. So those are jobs for which the current cohorts of Kuwaitis don't have the training, don't have the education. They might acquire that, but right now they don't have it. The majority of Kuwaitis in the private sector only have secondary education or less. So to the extent that the better paying jobs might be available, they often then lack the specialized skills to take them up. So there's an estimate again from TICG and Oliver Wyman that thinks that currently there would be about 17,000 private sector jobs needed per year for Kuwaitis if government only employs the people it really needs. But there are only about 7,000 that are really available or suitable. So there's a gap of about 10,000 jobs that the private sector right now doesn't provide. So in the long run, things have to change about wages, work conditions, and also the quality of the national labor supply, the skills of the national labor supply for the private sector to be able to absorb those job seekers. So right now the capacity for economically feasible Kuwaitization is actually limited. So there has to be structural change. And the story would be the same in Qatar, in the Emirates, and in Saudi. Bahrain and Oman are probably the furthest down the road in integrating nationals in the private sector, but they of course have the economies that are probably going to shrink the fastest because of austerity, so they're running into trouble also. Now, one thing you need to do to be able to pay higher salaries is to increase labor productivity. Because if workers are not productive, you can't pay them. You usually pay workers in line in a competitive labor market with their marginal product. If they don't produce much, then you can't pay them much, or at least you're going to go bankrupt. And GCC productivity has plummeted since the 1970s, or at least the 70s to 80s, and then has stagnated all the way through until today. And probably the most important factor in this is that labor has just been so cheap, that there hasn't been a strong incentive to invest in technology. It's been easier to just bring in more foreign workers. You can bring in as many as you want, and the labor price is not going to go up. In countries like Germany or Singapore, where there's been a lot of technology investment since the 70s, a lot of this was driven by scarce labor supply. You know, companies ran out of workers, wages went up because labor was scarce, and then companies had to invest in technology, you know, in machinery and making their workers more productive. Right now, that incentive is not very strong in the Gulf. I think I'll go on for 5 more minutes.
Yeah,
accelerate a little bit. So another problem, I think, with relying on private sector job generation in the future is that there's currently very little autonomous private demand generated in the economy. So most demand is government generated. It's either generated directly through government giving contracts or purchasing goods or services from the private sector, or indirectly, and that's the most important channel in Kuwait, in the sense of government paying salaries or transfers to usually national households, and those national households then going out and demanding goods and services in the economy. If you look at demand that's strictly speaking privately generated, so that's people who get a salary in the private sector and then go out to buy goods and services, at least among Kuwaiti nationals, that's really tiny. The total, I made a quick back of the envelope calculation recently, the total aggregate size of all Saudi salaries in the private sector is something like 1.3% of GDP. So it's almost a rounding error. So the demand that is generated through Saudis being privately employed and then plowing that money back into the local economy is very, very small. So the share of government salaries in GDP is drastically higher. It'll be something like above 20%. So orders of magnitude higher than the privately generated demand. And that means that if government-generated demand goes down, there'll be less demand for goods and services, and that means that the private sector, if anything, is going to shrink and will be less able to produce additional employment. So the kind of virtuous circle where you have more employment generating more demand, letting business grow and generate more employment, that really doesn't work in a situation where so much employment is state-generated, and where there's also a very high level of leakage in terms of domestic demand. So even if people earn money in the private sector and they spend it on goods and services, a very high share of those goods and services are imported all across the GCC. So a lot of it actually goes to foreign suppliers rather than domestic companies that could then generate jobs for nationals. So again, in the status quo scenario, the potential for job generation in the private sector is limited because there are no strong sources of local demand. Now, I think I'll quickly jump over this, and those would be just a couple of more of kind of pessimistic takes on the potential for diversification under the current status quo. We can go back to that. Here's just another slide that shows that state spending is very large relative to non-oil GDP, which is just another way of retelling the story that a lot of what's going on in the non-oil economy is driven by state spending. And fiscally, that means that if state activity was to be financed by, say, taxes, VAT, corporate taxes, in the long run income taxes, these taxes would have to be extremely high in Kuwait. They would have to be much higher than other countries because the government does so many more things in the non-oil economy. So again, that shows the kind of limit to fiscal diversification, because lifting taxes to those levels, apart from not being politically feasible, would really kill off the local economy and would lead to very, very dramatic inflation. I spoke previously about the limited potential for value-added taxes. So I'll come to the final slides, and I've given you enough downbeat and pessimistic messages. Now here's what I consider a ray of hope for both fiscal sustainability and for sustainable private diversification. I think there's potential to re-engineer the fundamental distributional bargain on which the political economies in the Gulf are based. So the basic idea that the government shares its wealth through energy subsidies and through state employment, I think historically made sense, but nowadays it's really the root of all problems. It's the root of the fiscal crisis, and it's also a major cause for the lack of diversification, because so many potentially good and productive people get sucked into government service rather than being available as productive employees in the private sector. So what could we do? I've been flogging this idea for a while, and some of you might have heard it before and be already tired of me, but I do it again because I think it's all the more pertinent now than it was when I first introduced it, when oil prices were still at $120 per barrel. I think something has to happen about state employment, but it's impossible politically to just reduce salaries or fire people in the government without doing something in return. I think that would it would lead to an enormous political backlash, and you could also argue that the GCC countries are rich economies, and the citizens, although it's not my call to make, the citizens are entitled to some share in the national wealth. Right? You could save it forever and build up overseas assets forever, but the resources below the ground in some sense belong to everyone, and perhaps everyone should be entitled to some share of it, some kind of resource dividend. And it's not a completely facetious idea, because some governments actually do that. You know, in Alaska, some of you might know, every resident of Alaska gets a check every year that is derived from the taxes on the oil companies that develop Alaskan oil resources. Something similar is done in Bolivia through the Renta Dignidad, which is kind of a basic income scheme that's financed through natural resource rents. And there are a variety of other schemes of sharing natural resources with the population just through direct cash distribution, rather than providing government jobs for everyone. And I think if you gradually substituted public sector excess employment, which is not fiscally sustainable, which distorts labor market, which also undermines government effectiveness, because the overstaffing in bureaucracy makes the bureaucracy a lot less effective, a lot less reactive. It makes it very hard to hold bureaucrats accountable, because everyone's entitled to their job. It's hard to incentivize people to control them. So if you found a way to slim down the public sector, recruit competitively, hold people accountable in the public sector, but in return say that we are willing to share the natural wealth, we just won't do it through energy subsidies and through guaranteeing government jobs. Instead, we'll just essentially write everyone a check. Every citizen is entitled to a basic income that's linked potentially to a long-run moving average of Kuwaiti oil income, so that you make it sustainable, so that when resource income goes down in the long run, that basic income can also be smoothed and adjusted. Or you fix it to overseas assets and say that the Kuwait Investment Authority aims at annual returns of X%, and of that we just share a certain natural resource dividend with all citizens. But then, in return, the deal would be, we're gradually going to stop the other ways of sharing the wealth, which are very, very distorted. Energy subsidies I don't have to run through. They're extremely costly, they're regressive, larger consumers, larger households benefit more, they're bad for the environment, they're extremely costly, and they distort investment decisions. And they make everyone choose energy inefficient technology. So if you substitute some of that with direct cash grants, and again, it's something that's been tried all around the world, and in a sense, the Gulf countries are the obvious cases where that should happen, because the fiscal resources are there, and the subsidies are so large. Then you could take a lot of distortions out of the economy. You could still stick to your political bargain of sharing the national wealth with the population in a much more transparent and equitable fashion, because everyone would get the same. You couldn't manipulate it. I mean, the only thing you can manipulate is citizenship, the social. Sure, some people will find out how to play around with this, but it's much harder to manipulate on a grand scale than, say, the Guatemala system, where, according to recent estimates, 30% or more of the people who receive the benefits are actually not working. Now this very basic unconditional cash grant scheme, it would be pretty tamper-proof, it would be hard to manipulate, it would be very transparent, very easy to plan in terms of long-term fiscal sustainability, and it would be much less distortive of labor market decisions, because then first-time job seekers would know that I'm not entitled anymore to a government job. I actually, if I want to earn more than I get through my basic income, which would be enough not to starve, but not enough to have a comfortable life, because otherwise it would just be too expensive, then people would have to think about which skills can I actually acquire to get a real job in the private sector. And people would have more of an incentive to enter the private sector. And because this basic cash grant would be unconditional, so you wouldn't lose it if you take a private sector job, the total income you would get could actually be quite respectable, even if the incomes in the private sector, even if the prevalent wages are relatively low. So you could get people onto a reasonable income level, you could make more jobs attractive for them that they wouldn't be attracted to without that kind of support, and you could justify taking away gradually the public sector employment guarantee. Of course, this would all have to be based on a lot of political convincing. You would have to do a lot of awareness raising. You'd have to make the commitment very clear that we're substituting this kind of grant for public sector employment, and then not cave in the future. Not suddenly, when there's some political unrest, say that, okay, well, after all, we are creating 20,000 jobs here or there. You'd have to be quite strict on that. But I think it would be easier to be strict because the wealth sharing would be much more transparent. You could say, we're already doing it. Here's the money, we're tying it to our national income. It's transparent, people are entitled to it. What we do beyond, we really just need to maintain the state to provide public services. The rest of government activities is not wealth sharing, but it is running a modern government and providing modern public services. So that's the kind of wild idea that I've been flogging that, in some cases, has actually found a receptive audience among senior technocrats across the Gulf. The thing is just that you'd have to do it when the times are still relatively good. Because once governments have run out of money, you can't substitute the current distribution systems with a new system, because you need a transition phase that could cost a bit of money in the long run. With this kind of basic income, you'd save, because you deal with government employment, which has been growing much above government income in a much more plannable way. You'd get rid of energy subsidies that have incentivized energy consumption growth at 6, 7, 8% a year. So you'd be on a trajectory that'd be much, much more sustainable. But you have to do it at a time when there's still the leeway to do it. So I did a few years ago make a little bit of calculations of how much money each Kuwaiti citizen would get if all energy subsidies were removed and all of the savings were converted to a direct cash grant for nationals above 15 years of age. And the number was $5,271 a year, which is not gigantic, but it makes a difference to lower income households. And then if you do one further thing and say that people who have public sector employment are not entitled to the grant, which I think would be essential, because otherwise you just ramp up everyone on a higher level and people would still prefer the government. But if you say that people in government, they already get an implicit share of our wealth, so it's people outside of it, whether employed or unemployed, who get this basic grant, then you'd quickly be above $10,000 a year, and that's just from energy subsidy reform. I mean, it would be a bit lower now because international energy prices have come down since that estimate, but it would work out like 300 KD or a bit less a month, so nothing to be sniffed at, and then you would have additional savings through public sector reform that you could factor into that model over time. So that's the big idea, and some of you might hear me talking about it again and again and again. So I hope you're not yet tired of me, and I'm much looking forward to your friendly challenges.
Thank you. Thank you, Prof. ستيفان, for this amazing lecture and your deep vision. And now we will move for the second session of today's seminar and the question. there is any question. Mr. Tariq.
It's been, I've heard it, yes, I mean, you've mentioned it before actually. You're not the only one who's advocating it, but it could be a difficult proposition. I mean, the question here is not just finance, it's about social stability as well.
Yeah.
What do you do about that? Then the other issue is once you have people outside the public sector, you mentioned the private sector doesn't have the capacity to employ. So how are you going to manage that once you have them outside the public sector? And how do you manage that transitional period? And I mean, beyond this argument, what else would you suggest? So this is plan B. Do you have plan C? Thank you.
Yeah, these are great questions. Yeah, I know I sometimes sound like a broken record, but there've been other ideas that seemed outlandish 20, 30 years ago, and it just, when they get fed into the debate time and again at some point, they actually get normalized and people start taking them seriously. But I take your point. Next time I'll talk about something else, I promise. Regarding social stability, I think there's a very valid concern, and I've heard that before. Now, the demography that you'd be most concerned about is young, male, first-time job seekers, right? Those are the people that you don't want to have in the streets or with too much time on their hands. And I think these are exactly the people that would be the most likely to actually seek a job because at some point they want to start a family. And that basic income grant, combined with potentially Dhammalamala, would give them enough of an incentive to seek a private sector job. And it's true that under current conditions, most jobs are not attractive enough, but you get this extra bump in income, which in principle should also make lower wage jobs attractive to talk about that. You could, I mean, one idea is to have a general lump sum fee on foreign workers that would somewhat increase the cost of foreign labor, and then use these fees to finance, for example, the Dhammalamala, to make it revenue neutral and to reduce at least the cost gap between nationals and foreigners. So I'm not saying that a basic income or a citizen income could fix the labor market by itself, but it could contribute. It could contribute to closing the labor cost gap. Now, another thing that would happen is there would probably be a bit more domestic consumption because the current distribution system is quite regressive. Some people get quite a bit of money out of it and others get very little or nothing. And if you have a flat scheme where everyone gets the same, that would boost the incomes of lower income households, and those have the highest propensity to consume, so more people would actually go out and buy goods and services. So there would be also a bit of a boost to domestic demand, although I couldn't put a finger on it. But I'll come up with something new for next time, I promise.
Any other? Tafadhal, Dr.
Thank you very much for interesting presentation. I think there's something missing in your presentation, ستيفان. The forecast or projection for next 20 years of income and expenditure. Expenditure, public expenditure, if now and historically it's been rising for 7%, not even 12%. But even if we say it's 5%, that means by 2036, we need public expenditure would be something like $220 billion. That means we need oil price of that size, $220. All the forecasts now for oil price by now 2040 is between $120 to $140. So there is a deficit of almost $100 billion. Oil consumption or electricity, now which stands as 300 barrels a day, will be 900 barrels a day, which means that you have less oil for export, without considering what the results will be by that time. So there will be a huge, probably if we continue this way, large deficits, which probably will eat up the reserves in much shorter time than estimated right now. For adopting Alaska model, first of all, we have to restructure the Kuwaiti society through few generations to be able to behave like the Alaskan or the Norwegians. It's something like, if you can make an elephant a PhD holder, probably that could be applicable. But right now, it's a hell of a job of restructuring the Kuwait society behaviorally and filled with ambitions and the will to work efficiently. Right now, the education system doesn't really bear any good expectation.
Thank you.
Good, thank you. I agree that the fiscal situation could deteriorate faster than in those projections, which makes it all the more urgent to re-engineer the distributional system. But that being said, historically, when oil prices were low in the 80s and 90s, expenditure growth also slowed dramatically. So I don't think that expenditure in the next few years will grow as fast as it did during the boom. But I think we're on the same page saying that in the mid or long run it is unsustainable and reserves will be run down. Regarding energy consumption, hopefully energy consumption growth will also slow down as if and when energy price reform happens. And I think that's the one most important thing that can reduce energy consumption. There's a lot of talk about changing building standards and changing appliance standards, but none of this sends the signal that higher prices sense. People will only buy energy efficient equipment and reduce their consumption when they feel it in their pocketbooks. Regarding the Alaska model, I think it's right that there are cohorts of people who are currently government employed that might be hard to incentivize and convince of becoming dynamic and entrepreneurial and enter the private sector. And in the scenarios that I'm thinking of, no one would lose their government job if they don't have to. What just would happen is that the new cohorts moving into the education system and the labor market wouldn't have that entitlement, but they would instead get the cash grant. And then you could gradually slim down the public sector just through people being pensioned off. You would of course give people the option to leave the government. And some of them would probably do that, some of the better ones, because they could then get the cash grant and do something else worthwhile. But the idea is mostly oriented towards future generations and changing the incentives and changing to some extent I guess the work motivation and the work culture among those. So the current stock of government employees is hard to deal with. I fully agree, but it's a way of containing the problem rather than brainwashing everyone into becoming a super productive private sector worker.
Thanks for the education. This is not my area of expertise, but I can know some basic things. Whether it's Kuwait, Saudi Arabia, United States, Russia, whatever, or even an individual. If you have a drop in your income of almost 80–85%, you should panic. One of the things, for me, the first thing comes to my mind, if I have a drop in my income by 80–85%, that rich person will become poor rich countries will become poor. So I don't think the Gulf countries will be rich anymore if this continues. The other thing, how this reflects on the currency, because we import everything. There was in East Asia in the late 90s when they had the crisis there, and it was crazy, like Indonesian rupiahs, it used to be 2,000 for $1, then it started going up to 20,000, then dropped to 10,000. Everybody
to break within 2 or 3 years. There's no much larger assets under management among those hedge funds than in the 90s, when that was the last time that speculation happened against Gulf currencies. And under the current scenario, it's just a matter of time until there's a forced devaluation. In the very long run, the very same could happen to Kuwait. It could fix the fiscal problem, but in a very brutal way, because what happens is that everyone's real income will just be going down by almost the same amount as the currency devalues, because suddenly your imports will be X% more expensive. Then government revenue in KD will go up dramatically, because you earn the money in dollars and then you convert it into KD at the new exchange rate. But everyone will be all the poorer for it. No, it could actually be a fiscal fix, but it would be really quite brutal with a very large inflationary shock. But some people have been advocating that. To do that, we also incentivize non-oil exports, although I'm not sure it's really the right way of going about it. But it's a clear and present danger, I think. It's bound to happen on the current trends.
Stephen, thank you for your talk, and let's talk about Plan C. Okay, you talked about demand driver coming in from the public sector. So if we are asking the right question, is how can we shift the demand driver from the public sector into the private sector? And the focus should be on that transfer of demand.
Yeah.
Now, pre-oil, historically, Kuwait depended on human resources. So how can we get the human resources up to par with the private sector, and from there, automatic, by nature, by demand, it will transfer. Other than that, I think it's going to be a very difficult situation.
Those are good points. And on demand, I'll give a reply that probably is not going to be that well received by the business community, which is that average wages in the private sector will have to go up a fair amount. And more of the employment will have to go to Kuwaitis, because Kuwaitis consume much more locally than expatriates who remit most of their income abroad. Now, of course, in the short run, there are all those skills shortages, and there are many jobs that you just can't fill with Kuwaitis, because Kuwaitis don't have the required profile. But you could shift incentives in a way that Kuwaitis will seek the right skills. And I agree that education is a big issue, but I don't think it's just a supply side issue. It's not just that the education system doesn't offer anything good. It's that not much good is being demanded. People go into the education system with the expectation of joining government, and so they're not very discerning. They don't seek out the right degrees, they don't seek out the best schools, because it doesn't make a difference for the vast majority of the population. So in a situation where private sector employment is more important, people will demand better education. So I'm not saying that this is the only fix, but it's an important factor to keep in mind. And then if you want to Kuwaitize the private sector more, assuming that skills are going to improve over time, you have to do something about the wage gap between expats and foreigners. There we actually go back to the demographic issue that the gentleman on the other side is mentioned, if you can shift the supply of foreign workers towards higher quality, more productive foreign workers, you'll have fewer of them. You'll have potentially foreign workers also consume more locally, because the higher you are in terms of skills, the more likely you bring over your family and you set up a local life rather than just living in a labor camp and remitting everything abroad. And that would also contribute to demand. And it would, if say you create that fee on foreign workers, it would incentivize Kuwaitization and bring more Kuwaitis into private employment that then would generate private demand. I mean, I guess to cut a long story short, you need more Kuwaitis in private employment. And how to get there, there are a number of tools. But I mean, one of them would be to try to close the cost gap further.
My name is Heythoغ from the private sector in Kuwait. Since the world economy is so much interrelated and integrated into each other, first of all, do you think that the deterioration of Gulf economy will have any impact on world economy? And the second question is, what would be the percentage of impact of Gulf economy on the world economy, particularly that thinking that if, for example, Kuwait's population's income slows down and goes down, that will affect other Gulf states such as the Emirates, because most investors and tourists from the Gulf depend so much on Kuwait. If I'm right or wrong, I don't know. So these are my questions. Is just exactly what's the impact of the deterioration of Gulf economy on the world?
I think that the global impact will be quite limited, because if you add up the total Gulf GDP, I don't know the precise figure off the top of my head, but it's 1.5 or 2% of world GDP. So it's not a story of the magnitude of what's happening in China. China, which is something like close to a quarter of world GDP, if they go south, then everyone's going to feel it. If the Gulf demand from the Gulf contracts, there are particular sectors, say oil services, or in some cases defense contractors that will feel it, but I don't think there'll be a global macro impact that will be very strong. Some shifting of overseas assets, the withdrawal of IDIA, KIA, SAMA reserves, that has some impact on individual asset classes, but I don't think it has a big macro impact. What it will have potentially is a very strong regional impact. On places like Egypt, Jordan, that are both dependent on private Gulf investment, but even more so foreign aid. And I think that could trigger a huge crisis. If that leads to a larger crisis, then all bets are off. They could also have a global impact. But I think it would go through a larger regional crisis rather than just come from the Gulf directly. And I think you're right that the UAE are quite dependent on their neighbors, although I recently saw some statistics about Dubai that I found quite impressive, which is that more than 2/3 of foreign real estate purchases in Dubai last year were from outside of the region. So it's huge demand from the UK, from Pakistan, from India. So Dubai is the one place that does still depend on its neighbors to an extent, but they're really on the way to becoming a global hub. It's something that I wouldn't have thought. So they'll be affected, but there's still pretty significant external demand for what Dubai does.
Will this cause any sort of regional recessions in the area?
Yeah, I would think that places like Egypt and Jordan would be quite.
Well, I mean the Gulf itself.
I think the recession would already be happening through the fiscal crisis. So I mean, all of the Gulf countries, growth is going to plateau at a pretty low level in the coming years.
Thank you, ستيفان, for the presentation. My name is Francisco, work here in this main company in Kuwait. I might have contributed involuntarily to the fact that people are getting tired of your proposal, because I've been repeating it quite often in the last 2 years since I heard it in your last presentation, because I found it the boldest one that I've heard as a reform to address the problem of fiscal sustainability in Kuwait. My conclusion after a few years living here is that it's very complicated. Its implementation is very unlikely, very politically sensitive. So I wanted to share what I consider the likeliest scenario, my forecast, 10 years down the road, in case oil prices remain low. I want to run it by you to get your feedback. So what I see is a situation in which structural reforms are not implemented, so political capex disappears, but the government continues to employ most of the people, and spending keeps going up, the wage bill keeps going up, and it gets funded through three sources. First, in the GCC, most countries would move
miraculous major recovery in the oil price, which I don't see, but I'm not much of an oil expert. I think it's this kind of situation that we're heading for, and it looked fairly similar to what the region looked like in the late 1990s. So I think the basic political parameters are still similar. There's a bit more capacity for adjustment, but the basic ways in which money is shared, the basic ways in which demand is created, the basic structures of industry and services is very similar to what it was like back then. So yeah, there'll be a mix of debt issuance, asset drawdown. There's likely to be some constitutional legal change about the Future Generations Fund, because that will have to be touched at some point. So I guy, they said that we don't know how the new market functions. We're still feeling our way into it. It's a fundamentally new market. It's fundamentally different from what it functioned like until shale came into play. So the basic story is that you have 4 million barrels per day more of American oil produced that have been added to the market between 2010 and now, all of which is shale oil. So that's almost twice as much as Kuwait exports. So that's really, really a game changer. And the big question is now how quickly shale production capacity and other high-cost production capacity can be destroyed, and more importantly, once that high-cost supply is off the market, how quickly it's going to come back if prices fact that a lot of people are idle or not properly employed is because there's this entitlement to their job. You can't threaten them. You can't say, well, I'm going to fire you if you don't perform. And that's part of that very wealth-sharing structure that I think needs to be revamped. And I think what you say is also illustrated by the fact that the number of Kuwaitis in the government sector has increased every year by at least 3–4%. At the same time, the number of expatriates in the government sector has also increased by the same rate, which shows that what you really would want is substitution, right? The Kuwaitis taking the jobs of the expats and fewer expats. But what you have is an increasing number of expatriates still doing a lot of the actual technical work, while Kuwaitis are in many cases idle. So yeah, I very much agree with what you say.
My name is Hassan Sadi, Professor of Financial Economics, and I love the professorship talk when it's based on literature, not on the real situation. We talk about Kuwait. We have 75% of the income of Kuwait is distributed among the budget, distributed among salaries, wages, and direct and indirect. But to tell you the truth, this is not a salary or wages or something like that. This is a welfare system. When we talk, you will see something like 97% of the salaries paid for the people working for the public sector. 97% of it, it's a welfare. It is not salaries or wages. When you hear the numbers coming from the Ministry of Planning in Kuwait telling that the productivity of the worker in the public sector is less than 14 minutes per hour per day, that means that you have 3% only carrying the country and 97% carried over the shoulders of this 3%. This welfare, this is not self-employed. If you look for the private sector, the same, but not with the same hard and tough and scary numbers. Because in the public sector we have this dam and amala, as you mentioned so many times, which contribute almost 30% to the private sector. That means 30% of the salaries paid in the private sector, welfare, not salaries and wages. This is one thing. The other thing, you are calling the public to participate more in looking after the government and this and that, and to have kind of social responsibility and kind of political participation. But I will tell you something very nice. The one who started to move the salaries and wages up in Kuwait here, the public, not the government. Starting with the demonstration here and there, and to tell you something very scary. The one who started this, the one who should educate the people not to do that, started from the university. It started from Kuwait University. That the professor in Kuwait University started this demonstration to increase their benefits out of whatever they deserve, they don't deserve. This is another issue. But they started the move. After that, engineers, lawyers, everybody in the country start to ask for the same, and start to go up with the so-called Arab Spring. So the government cannot do anything but to calm them down, get whatever you want, but don't go to more than that. It's kind of social welfare, and if you want to say it in a harder term, it's kind of bribery, which is too hard to be fixed out of literature. It has to be fixed out code of ethics. We have deficit of ethics. It's not the deficit of money. No, the country has surplus, huge surplus, can fix anything. But the problem was the deficit of ethics. Thank you.
Although I wouldn't put it in as harsh terms, I think I agree with a lot of the substance, just that I have some sympathy for professors who want higher wages.
حضورنا الكريم، شكرا على حضوركم تشريفكم لنا جمعية الاقتصادية جمعيتكم، وإن شاء الله نكون قد وفقنا في جلستنا اليوم. Professor, thank you very much for...
one thing I should say, I should have said at the very beginning, that is that the program that I'm running running at the LSE about the comparative political economy of the Middle East is actually financed by the Kuwait Foundation for the Advancement of Sciences. So they've been absolutely instrumental in the work that I've been doing. So I'd also like to use that occasion to thank them in the heat of running over from the construction side. I completely forgot about that. Thank you.